Hi everyone, this is Sandeep. Welcome to my YouTube channel. So today I'm going to analyze 7 stocks from a fundamental basis. Hope you like this video. And so first for today, that is as on 28th February 2022, I am analyzing Nestle stock. So as you know, Nestle, they are very famous for Maggi noodles and Nestle Cerelac, baby powder products. So this is where they are quite dominant. It's a very famous FMCG company, and they also make Nestle chocolates and all that. So if you see the current market, it is an expensive share. Per share costs around 17,700 rupees. Now let us go, for example, to the income statement. If you see from 2007 onwards, there's been a consistent increase in the income, and this is on an annual basis. If you see from a income statement quarterly basis, it's been continuously increasing. However, the December one was a bit less, December 21 compared to September. And balance sheet also, if you see, looks fine. There is nothing completely different. It's quite flat actually. They have consistent reserves, and the cash flow is also steadily increasing as it's a monopoly in certain sectors, which I discussed earlier. So if you see, the cash flow from operating activity is higher than investing and finance, so it's a net positive company from a cash flow perspective. And if you see from profits also, yes, it's more or less compared to December 17 and 18, profits have stagnated. Profits and the profit margins, it's around 11%, 10 to 15% in the last 3 years. So this is how. So I think Nestle, definitely there will be growth, but not like what you see. It is you can definitely accumulate this company. The next what I would see is Mahanagar Gas Limited. Again, if you see from 1264, it has now gone to around 700 levels. That's a more than 20-30% correction. Generally, if you ask me, I avoid government stocks, but again, you can do a due diligence and decide if that is what you're looking for. Now if you see, the margins, earnings have been flat. However, this year has been good, and if you see, tax margins are good, but the return on capital employed has been decreasing on a year-on-year basis. ROE and the ROCE, it's an important metric. The sales have come down compared to previous year 2020. If you see to 2021. So probably that is the reason why it's come, probably the stock is coming down. And if you see quarter-on-quarter basis, the earnings have come down, the income also has come down from December. It's been a very weak quarter, especially December 2021 compared to September, June, March quarters. Now the income statement, if you see, March 20 to March 2021, the revenue has come down a lot compared to March 20. Now, income statement has increased, sales have increased, income is increased. When I see from an annual, yes, it's decreased. Whereas on a quarterly basis, yes, there has been an increase. EBIT has come down. For example, from earnings perspective, yes, the December has been quite less. the tax and the earnings from a quarter on quarter basis. Even you see this on a year basis also. Now balance sheet is more or less flat. It's been increasing, reserves are increasing. Now if you see from a cash flow statement, it's burning a lot of cash. The operating activity is less than, it's very flat. The cash flow is only 12 crores. Not much difference. It's just sufficiently managing the working capital. Now estimates, if you see, they are quite positive. A lot of positive outlook is being there. Many equity institutions are saying buy, hold and all that. The debt is low. Now what I suggest is avoid this stock and wait till FY22 results, and then you can decide if this is the right thing. Generally I don't go for government and probably wait for it. I don't see there should be a great, because the problem is Mahanagar gas, there is also huge competition from Adani gas as well. So that we have to see. Quarterly, annual income statement has come down. Quarterly there's been an improvement, no doubt. So the next stock after this would be Wipro. As you know, Wipro is an IT company, outsourced. Many major companies outsource their IT projects to Wipro. It's there all around the world. You see, there has been from 730, it has gone to around 550 levels, more than 20% correction. We need to understand why this has happened. The quarterly earnings, there's been a decrease from September to December. Probably that's why investors expected more, but it has come down. If you see the earnings yearly basis and annual basis, yes, there has been an improvement. The earnings and the earnings and the profits. ROCE, ROE has increased a lot from the last year. Whereas on a quarterly basis, there has been a reduction in the income, and income statement for the year annually, it's very flat. Last 2 years, quarterly income statement has come up from only in September to December basis. Balance sheet is very flat. Cash flow has, you see from previous years, the net cash flow has come down. What I mean by this is, it is using more cash than it is required. So this, I don't know how they're going to manage. They need to improve their cash flow perspective. If you see from all these years, they are investing, whereas the financial activity, they are, I think, raising a lot of bonds, loans, I suppose. So they are not diluting their equity. This something has to be done. People are saying a lot about it. They're quite positive. People are saying to buy, 17.1, 14.1. The only thing challenge in Wipro is they need to improve the cash flow, and whereas this quarter the earnings are also come down. Generally, if you observe December, the earnings come down in 21-19. I would say wait for a while, let it go down, wait for the next quarter results, and then invest in this stock. The next one would be MCX, Multi Commodity Exchange. So this is like a, an exchange board, where a platform where you can buy and sell commodities like copper, steel, oil, and those kind of the edible oil. So you can do as part of trading and hedging. So MCX is a platform. Again, there's been a correction, 2135 to 1200. Oh, that's more than 40% correction. The margins have been quite flat in the last 4-5 years. The profits have been quite flat. Okay, now the problem is the last 1 year, the earnings have come down, the earning income all have come down on a quarter-on-quarter basis. The income statement also this year has been quite dull. Cash flow is also an issue. They are not very net positive. I really doubt. I would say just avoid this stock for a while. Financials are not really strong. Let the financials improve. That is what I would see. Just wait for a while, especially the earnings, the income, cash flow. Then what else? I would say wait. Just checking all the. Probably you have to wait. The next one would be Container Corporation of India. This stock also is corrected from the peak of 750 to 550. So Container Corporation of India is where they do, as the name suggests, handling of goods, shipping. So definitely helps a lot in the supply chain management of the country. The margins have come down, the earnings have come down, the ROC, the ROE was flat on an annual basis. However, on a quarterly basis, yes, there has been a huge improvement the last 3 quarters. Even with the quarterly whereas if you see balance sheet is more or less this fine. Quarterly income statement is okay. Cash flow is also okay, but there It's been net positive compared to the previous 2 years, 2020 and 2019. You can accumulate this company. There has been a healthy correction. So probably it's again coming back to the same level. But again, it's a good stock, decent one. But again, problem is this is a government stock. So don't go too much in this. Just accumulate a bit. Okay. The next I would go is Syngene International. The stock has been quite flat, 700 levels. In September it's gone to 550. A healthy correction. Let us see the reason. The margins have come down, earning margin, the return on ROC, ROE, debt has increased. Revenues have come up, definitely, annual basis, whereas on a quarterly basis, it's more or less fine. Slight improvement, not a big change. Very flat. Cash flow is positive but not too much as what you think. In fact, cash flow come down. There's been good positive ratings. Let me see the news on this. People are quite positive. Definitely you can accumulate. Financials are not that bad, except for income statement. Annual income statement is positive. Quarterly is also positive. The margins are coming down. Earnings margin, ROC, ROE. Definitely you can accumulate this company. No doubt. Now let me go to Aditya Birla Capital. December 17, 230. It's now come to this level. 100. Okay. So low high of 120 to 100. Okay. That's been around 30%, 40% correction. Margins are improving. Okay, but sales have come down. Earnings margin. Quarterly basis, yes, it's improving a lot, the earnings. Now the revenue has come down. The income has improved a lot, quarterly income. Cash flow, they are investing a lot in their capability, whereas the operating is negative. It's cash is very less. It's almost cash negative, just breaking even. Debt is very high, as you see from top. Let me see news on this. Not much actually. Oh, sorry. Why is it showing Grasim Industries? People are saying up, up, up. What I would suggest is just accumulate, but don't go overboard. There are much better stocks. The problem is they are not able to manage their debt. That has to reduce. I hope all of you like this video. Please subscribe to our channel if you have any questions, clarifications. Don't feel bad to hesitate. Feel free to ask. I hope you like this. Thank you and happy investing.